as I said, yeah, we covered some of this. Engineer by education profession, and then that's by day, and then whenever I've got other time, it's not family time, etc. I'm pretty much thinking quant investing. It's just it's always going. Like a lot of investors who are passionate, it's just always going. So
Right. Right.
so that's kind of what I
So,
do.
so I see you got real estate, you got some real estate in there too. You did that come after your financial advisor type of, kind of,
Actually, this is a really interesting maybe story and or lesson. I won't get into the gory details. This is probably another podcast in itself, but
right.
but in terms of the journey, my journey. So like I said, I experimented with stock picking. It was okay, and then I got into quant investing. Had some early success, and I got bold and cocky, levered up, and then things went sour, and then I got stung. So that,
Right.
okay, hold on here, just got to take a break, and real estate was kind of something I've been looking at for some time. I took the plunge, went in on some residential real estate, and then I found that wasn't quite it either. So so kind of with some experience and perspective, so, okay, let's go back to quant investing, go back to the basics, regroup. So basically spent a year kind of not in the market, but just kind of doing research, uh, uh, going back to basics on what quant strategies are, how to properly backtest, how to properly interpret the data, and then it kind of that's okay. Let's go into this again, and then yeah, it kind of clicked, and then kind of learned a lot of lessons. Still learning lessons, always lessons to be
Of
learned,
course.
always.
So
But I think,
what's
sorry.
interesting here, Ryan, is that I see quant investing one, and then number two, and you got micro caps and nano caps there. So is that to imply that in your first iteration of it, you weren't really looking at the nano caps and micro caps?
I was, but maybe not as focused
Okay.
as kind of a was in this kind of second round.
Cool.
So I mean, the size factor was definitely there, but definitely on my latest leg of the tour, if you will. There's yeah, pretty much exclusively microcaps and nanocaps. Um, there's a minor caveat to that which we can get into later.
Okay.
But basically, for all intents and purposes, yeah, this is kind of the process or the sequence.
Awesome. All right, cool, man. A lot of great investors didn't start out as, in finance. And I mean, and I know there's a lot of investors I talk to, and like a Geo, for example, are engineers or in that kind of technical fields. And
Okay.
it's pretty funny. You're coming from that background too, right? If you look at Chuck Akre, I think I don't know how you pronounce his name, but Akre. He has
Okay.
he has a background. It was, I think he was actually an English
Oh
teacher,
wow.
professor, and
Okay.
he ended up being, he's a great investor based on fundamentals and based
Okay.
on investing. But you see a lot of that. And I love when I see that, because it just shows that if you really put your mind to it, you can. You don't got to be born an investor, right? You can teach yourself to be an investor.
Right. Yeah. It's absolutely. I mean, it's like I couldn't agree more. I mean, it's kind of you've probably heard before. I mean, it really is a lifelong journey. I mean,
Yeah.
you learn new things about markets, about yourself as an investor, what your personality is, your strengths and weaknesses, and then managing those to hopefully improve as an investor. But yeah, no, it's kind of a very multidisciplinary endeavor.
Cool. All right, let's look into. Let's continue.
Sure. So they're my contacts. I think you covered those.
Well, portfolio
From
one,
we,
two, three is what is a website, or is it just yeah?
Yep. So Portfolio 123 is pretty much the tool that I use pretty much on a
Okay.
daily basis for quant strategies.
Okay. Excellent.
So it has a full point in time database of markets of US, Canada, and now Europe.
Mm-hmm.
So basically, it allows you to create screens, ranking systems, build your own universes, and we'll get into that. But yeah, this is pretty much the workhorse, which
Beautiful.
I've and it was kind of an accident actually that I found this because it is pretty. I mean, I try and spread the word on Portfolio 123 and some of the other investors there do too. But it was just by accident I found this. It was
Yeah.
I was reading a Seeking Alpha article years ago on the magic formula, and this fellow referenced Portfolio 123, and he did this nice back test. Oh, that looks interesting. So I kind of by accident found this,
Mm-hmm.
and it just kind of clicked.
Yeah,
And
they have you can follow like Peter Lynch's strategies or any
you
you
can
could put any
pretty much,
investor in and you can mimic it, right? I remember the correctly.
yeah. I mean, there's lots of off the shelf screens and ranking systems that they provide.
Mm-hmm.
So like Lynch style, as you said, there's Buffett, Graham, Can Slim. I'm sure some of your
Mm-hmm.
listeners are familiar with that approach.
Right.
But really, where the work is to take those and then customize them to you.
Okay.
So add your own factors, tweak factors, make it more technical, make it more fundamental. Try different markets, different sizes, micro caps, mid caps, large caps. I mean,
Beautiful.
it's really flexible.
And do you
Just
find the data to be accurate on the nano cap level in terms of like the earnings per share numbers and things like that and complete?
oh, yep, yeah, no, the quality of the data is quite high. I mean, there's the odd uh, anomaly, I suppose you could say, but all in all, it's pretty accurate. And one of the most important parts here, Maj, is that it's point in time, so there's no survivorship bias. Uh, One of the critiques of the size factor actually is that in the early days, when kind of the size factor was first documented in academia, it was quite popular. The size factor, it's quite effective at finding alpha, but I guess in recent years it's been criticized because the data that was used in the studies had quite a survivorship bias.
Mm-hmm.
So microcaps, obviously, a lot of companies go under, they get acquired, get delisted, and I guess the database at the time um, was not point in time. So that's kind of been one of the critiques of that research. But fast forward to today, I mean, that's any quant research. This should be default. Like if it's not point in time, then it's really not. Yeah, you should really take that with a very large chunk of salt.